Hello, welcome to another episode of Tutorials on the Go. My name is Edmond Jomna, and today we are going to be discussing a whole new topic on prepayment. If this is the first time of joining Tutorials on the Go, I'll urge you to visit our channel on YouTube and hit the subscribe button. Also hit the notification bell so that you'll be up to speed with all the new videos that come up. Let's move on to discuss the main topic for today. Now, the accrual concept in accounting asserts that revenue and expense must be recorded in the period that is earned in terms of the revenue and incurred in terms of the expenditure, respectively, and not when the payment is received, that's for the revenue, and made for the expense. This concept allows for certain entries to be made in the statement of profit or loss without the exchange of cash. Also, some payments may be made in the period without it being recorded in the statement of profit or loss in that period. We're going to learn about the treatment of such transactions in the financial statement. Let's look at a prepayment. Now, this is a payment made in advance, meaning payment made in 1 year relating to an expense to be incurred in another year. That is a prepayment. Let's look at an example. It is normal for rent for 2 years to be paid at the beginning of a year when an accounting period is supposed to end on 31st December. Also, paying car insurance for a whole year at the beginning of the year. So if the year end were to occur halfway through the insurance period, then only half of the expense would have actually been used. So in the two examples above, we see that the other half of the payment would have been made in advance and a prepayment. So actually, if the business were to cease operations, this payment is supposed to be paid back to the business. But business is deemed to be in a continuum. So the money is not supposed to be paid back to them. So it will be used in a subsequent period. So the only portion of payment that has been used or incurred and relates to the period must be captured in what? The statement of profit or loss. Let's look at an example. Eugene started the business on 1st January 2020. Now, during the year to 31st December 2020, he made the following payment in respect of telephone. Mind you, we are solving this question in relation to a period that is starting on 1st January 2020 and ending on 31st December 2020. The first expenditure was made on 5th January 2020 of $800 for a period of 6 months ending 30th June 2020. It means that this 6 months is starting from 1st January 2020 to 30th June, which relates to this period, so it will be an expense. The second payment made on 15th June 2020 of $2,000 spans a 12-month period to 30th June 2021. A 12-month period ending on 30th June 2021 is supposed to begin on 1st July 2020. It means that only half of this expenditure will relate to the period in question, the period of 1st January to 31st December 2020. It means the other half will be a prepayment. So write up the T account for telephone and prepayment for the year to 31st December 2020. B. Show the extract from the statement of profit or loss and statement of financial position. C. Close off the account. Let's discuss how we are going to solve this question. The first requirement is to post the entries into the telephone and the prepayment account. Now, telephone is an expense account and prepayment is an asset account. If you remember our discussion on financial reporting, we talked about a prepayment when an expense is paid in advance. It's an asset. So if you look at the first payment of $800, any item of expense is supposed to be debited. So the first transaction was an $800 payment in respect of telephone. We debit the expense account and what? Credit the cash account. We've not been asked to solve for the cash account. That is why it's not showing here. The second payment of $2,000. We debit the telephone account in the name of cash for $2,000. The other entry again will be a credit to the cash account of $2,000. Now, it is not proper to let all the $2,000 sit in a telephone account because half of it does not relate to this year. And remember, profit or loss account captures only items that relate to that particular year. So what do? We have to come and credit the account to take away that aspect of the payment that does not relate to this year. So we credit the telephone account in the name of prepayment for $1,000. Then the other entry will be what? A debit to the prepayment account in the name of our telephone. Now, after posting the entries, what next do we have to do? Balance of the accounts. Good. So let's tackle the telephone account first. What are the rules of balancing accounts? We first put total lines on both sides of the account. Then we sum both sides looking for the bigger of the two. So let's look at the debit side. it will give us a total of $2,800 against a credit of $1,000. Obviously, the debit stands bigger. So we put the $2,800 in the total lines. We move to the smaller side, which is the credit side, and find the difference, which will become the balance. The balance will be $1,800. Then we move the balance to the opposite side, which is the debit, and put it below the total line. We come to the prepayment account. So we first bring total lines on both sides of the account, put the bigger of the two, which is the $1,000, in the total line. Then we move to the smaller side, which is the credit, and find the difference. Then we move the balance to the opposite side, which is the debit, and put it below the total line. You now have to close off the account. The telephone account obviously is a statement of profit or loss account items. So we come to the account and credit that account because the debit side has the balance. We come to the statement of profit or loss account and debit it with telephone. Because the statement of profit or loss account here is not in a T account shape, but a vertical shape. And it's an extract as well. We just put the expense there and put the telephone there. Then the prepayment account is a balance sheet item. So we leave it as it is. So then we come to the balance sheet item. Then we create a column for current asset. This is an extract again. So we just create a column for current asset where the prepayment is supposed to belong. Then we put the prepayment there and put a figure of what? $1,000 there. Subsequent accounting period. In the examples that we have solved earlier, we were dealing with an accounting year. Now at the end of the year, balances were left on the T account. As a result, the next accounting period will start with a balance brought forward, which is the opening balance, that is the closing balance in the previous year, and should therefore consider what entries are needed in the second period. So let's look at an example. During the year to 31st December 2021, Eugene made the following payment in respect of telephone. Now 12 June 2021, $2,400 for the 12 months to 30th June 2022. A period that is ended on 30th June 2022 obviously will begin on 1st July 2021. Half of this payment will be a prepayment. So the requirement is what? Write up the T account for telephone and prepayment for the year to 31st December 2021. Show extract from the statement of profit or loss and statement of financial position, and close off the account. Let's look at the solution. We open the T account, open the prepayment account. Let's come to the prepayment account first. Remember from the previous example, there was a closing balance of what? $1,000 on the prepayment account. So the balance was on the debit side. We bring it forward into this year and have balance brought forward for $1,000. Now that has been done, we have to transfer this balance into the telephone account because it was a payment made in the previous year in respect of this year. So we have to bring it and record it in this year's profit or loss account. So how do we do it? We come and credit the prepayment account with a balance of $1,000 to zero it off. Then come to the telephone account and debit it in the name of prepayment for $1,000. So the $2,400 will be debited to the telephone account in the name of cash. Again, half of this payment relates to the subsequent year. So what do? We come to the telephone account and credit it in the name of prepayment for $1,200. Then debit the prepayment account in the name of telephone for $1,200. Let's move on to balance the account. First, we deal with the telephone account. We bring total lines on both sides of the account. So the debit side has a total of $3,400. The credit has $1,200. So we put the bigger, which is the $3,400 in the total lines. Come to the smaller side, which is the credit side, and find the difference, which becomes the balance. So the balance is now $2,200. We move it to the opposite side, which is the debit, and put it there. Come to the prepayment account. We put total lines on both sides of the account. Find the bigger of the two sides. The debit is $2,200. The credit is $1,000. So the $2,200 gets to be put in the total line. Then we come to the credit side and find the difference, which becomes the $1,200. Then we move it to the opposite side. Now we are supposed to close off the account. So we close off the telephone account, which is a profit or loss item, by crediting it because the debit has the balance. Then we come to the profit or loss account, then put it there. The telephone expense now becomes $2,200. We come to the prepayment account, which is a balance sheet item. We leave it there by way of closing it. Then we bring it to the financial position in the current asset column and put the $1,200 there, which will also be carried into the year which is supposed to end 2022. That is how prepayment will work. when we move into the subsequent period.